Ladies and gentlemen, thank you for joining me today as we dive into what is shaping up to be a landmark moment in the evolution of enterprise software and artificial intelligence. Palantir Technologies is no longer simply a data analytics company. It has become, in many ways, a symbol of what happens when ambitious technology meets enterprise transformation. In its latest quarter, Palantir achieved $1.18 billion in revenue, a growth rate of about 63% year-over-year, with adjusted earnings per share of 21 cents, easily exceeding analysts' expectations of 17 cents. Source: what's driving this? Two factors stand out. First, the company's commercial business in the U.S. grew by roughly 121%, and second, Palantir raised its full-year revenue guidance to about $4.40 billion. Source: now, in a world where AI hype often outpaces results, Palantir is delivering both the numbers and the narrative. The platform it offers, often referred to as AIP, is being described by the company itself as the only platform delivering transformational impact in this market. Source: yet, here's the paradox. Despite beat-and-raise results, Palantir's stock did not soar uncontrollably. It initially jumped nearly 7% in after-hours trading, then gave back the gains and ended down about 4.3%. Source: why? Because the expectations baked into the valuation were already so high that even outstanding results seemed to struggle to satisfy investors. One strategist put it this way: at this valuation, even great numbers don't move the needle. Source: this brings us to the core story. Palantir's business is booming, but the market is asking a tougher question. Can this pace of growth be sustained? Does the valuation make sense? What must happen next for the stock to continue to reward investors? Let's start with the business fundamentals. The U.S. commercial segment now accounts for about 75% of total revenue, underscoring a shift from Palantir's historical dependence on government contracts to enterprise business. Source: consider this: closing more than 200 deals over $1 million in TCV in the quarter, of which dozens were $10 million or more. That kind of scale matters. Long-term enterprise contracts often result in higher visibility, stickier revenue, and a higher probability of upsell. The company's reported adjusted operating margin is about 51%, one of its highest ever. Source: that tells us that beyond growth, Palantir is seeing improved leverage in its spending. But the other side of the equation is valuation risk. The market is clearly saying, great results are one thing, great results that exceed expectations and then keep doing so every quarter is another. With forward PE multiples in the several hundreds, Palantir stock is betting not only on execution but on continued exponential growth. Source: that means the margin for error is thin. If growth slows, or if the enterprise sales cycle elongates, the stock could face disproportionate downside. Let's talk about opportunity. The enterprise AI market is estimated to be enormous. Organizations across industries, manufacturing, energy, logistics, defense, are looking to embed AI into their operations. Palantir's emphasis on ontology, data integration, workflow automation, and building AI-first enterprises positions it favorably. Source: for example, Palantir says that AI Hive Mind and other capabilities are allowing customers to generate proposals, software agents, and value very quickly, sometimes in days what would previously have taken months or years. Source: this acceleration is especially meaningful for boardrooms and C-suite executives who must show tangible ROI from their AI investments, not just proof of concepts. That dynamic favors vendors like Palantir, which claim to deliver production results rather than pilot projects. On the flip side, the competitive landscape is intensifying. Big tech companies, cloud providers, specialist AI firms, public sector players, all are vying for a piece of the enterprise AI transformation. Palantir must not only win business, it must defend its lead and keep showing superior value. Another risk: macroeconomic and government spending cycles. With roughly half of Palantir's government business growing 50% plus year-over-year, any slowdown in government technology spend or budget pressure could impact near-term growth. Source: also, the expectations curve is high. Investors may expect not just growth, but accelerating growth. That raises the bar for future quarters. In this context, any good quarter might be viewed as disappointing if it fails to top what the market expects. For prospective investors and for your YouTube channel viewers, here are 3 key themes to watch. 1. New large enterprise deals and whether deal size is increasing. 2. Margin expansion or contraction. Is Palantir maintaining operating leverage while scaling? And 3. Guidance for full year and next year, particularly whether management raises expectations again. On deal size. If we see a growing number of $10 or $20 million deals, with multi-year terms, that implies deeper enterprise penetration and maybe less churn risk. Margins. Growth is important, but profitable growth is even more important. A 50% plus operating margin at this stage is impressive, but sustaining it while growing revenue into the multi-billion range is challenging. Guidance. The raise to $4.40 billion for the year is certainly a positive, but the market will want to see continued upward revisions, especially if focusing on 2026 growth beyond the current year. From the channel perspective, this is a strong story. A company at the intersection of AI and enterprise transformation, posting big numbers, raising guidance, yet trading with caution because the bar is so high. That gives you a narrative: success, but also risk; opportunity, but also expectations; innovation, but also competition. In other words, Palantir's story contains both promise and caution. For viewers, you can spotlight the idea that while the company appears to be winning, the stock is still a bet on continued execution, not just this quarter. Let's talk shorter-term investor psychology. When a stock rallies hard into earnings, Palantir had hit record highs near $207 after the announcement, and then sells off slightly. That often signals sell the news behavior or profit-taking. It doesn't necessarily reflect a flaw in the business, but the market's recognition of risk at the margin. Source. For longer-term investors, patience may be required. If Palantir is truly building a multi-year AI platform with expanding enterprise penetration, the real benefit might accrue over several years rather than being fully reflected in one quarter's stock move. I'd also note that Palantir's transition from government contracts to commercial enterprise is a meaningful inflection. The commercial business is higher growth, but often lower margin initially. However, Palantir seems to be blending scale and margin already, which is a positive sign. From your YouTube channel angle, emphasizing how enterprise AI is moving from hype to production is valuable. Palantir is showing production-level results with real customers, and that elevates the story beyond potential to performance. However, you should balance the story. Highlight the valuation. When a company is priced for perfection, any misstep or moderate quarter may trigger outsized reactions. Educating viewers about this risk helps build credibility and nuance. In summary, Palantir delivered a strong quarter, raised guidance, dominated in U.S. commercial growth, and is making the transition to a broader enterprise AI platform. The stock's reaction tells us that while the fundamentals are strong, investor expectations are very high. For viewers, the takeaway is, this is a company worth watching closely. It may well be a leader in enterprise AI, but the investment is not without risk. The execution must continue, the enterprise deals must scale, margins must hold, and guidance must be raised. Otherwise, the valuation may be tough to justify. As you prepare your next video, you might frame the story like this: Palantir, from data analytics to enterprise AI juggernaut, but is the market willing to pay for perfection? That kind of framing invites engagement, opens room for debate, and positions you as a nuanced commentator. Thank you all for listening. I look forward to covering the next update and seeing how Palantir continues to execute in this dynamic landscape.